Welcome to the Think Like a Saver, Real Ways to Save Town Hall. Join members of the America Saves team, along with personal finance and savings experts, as we discuss some very practical ways to save around your home, on food, monthly expenses, and more. With these easy to implement strategies, you'll be able to see very real savings in your wallet and feel more financially confident. We encourage you to engage with us by leaving comments, asking questions, and sharing your tips and top takeaways in the chat.
Thanks for tuning in to Think Like a Saver, Real Ways to Save. It is officially America Saves Week 2023, a time-honored tradition that is a week where we can collectively, as individuals, families, leaders, and employers, to pause and check in with our finances. We can set and renew goals and encourage those around us to do the same. Whether it's the children and young people in your lives, your significant others, your friends, or employees, we all have a role to play when it comes to a more financially confident and stable America. And the fact that you're here tuning in is genuinely to be celebrated.
So America Saves Week is from today, February 27th through March 3rd, and our theme is A Financially Confident You. Each day of the week, we focus on one specific area with your finances. We share tips, strategies, and activities that you can do that will increase your financial health. Today's theme is saving automatically. Tomorrow, we'll focus on saving for the unexpected. Wednesday, our theme is saving for major life milestones like retirement or purchasing a home or a loved one that you're saving for college. Thursday's focus is saving to pay down debt, which we all know a lot of our savers are working toward reducing your debt, myself included. And Friday, we wrap up the week with saving at any age, where we discuss saving no matter where you are in life, including age-appropriate conversations with young people, competing priorities in your 20s and 30s through retirement, and the decumulation of saving during your retirement years.
So, we hope that you'll actively participate in the week by putting the strategies we share to work for you, using our resources, and staying engaged with social media, emails, text messages, and more. One more really exciting thing to tell you about happening this week, and that's our I'm Saving For sweepstakes, which are 5 $1,000 cash prizes that we're giving away to you, our savers. All you have to do to be eligible is to comment with your very top takeaway from today's town hall on either Facebook or on YouTube in the next 24 hours. You also need to take the America Saves Pledge within the last 12 months. And if you're not sure if you've done it yet or not, go ahead and do it again.
So, we mentioned that this year's theme is A Financially Confident You. Let's watch this video with Amanda and Ben, the America Saves Senior Communications Manager, discussing steps you can take to build financial confidence.
Everyone has their version of financial confidence. Like it's what makes me feel confident about my finances. What does financial confidence mean to you?
For me, it means having all of the information that I need to feel like I know what I'm doing, basically, right? I'm making decisions that align with where I am right now, with where me and my partner are right now. So having all of the right information and understanding how to move forward. And we always talk about how everyone's journey is unique. Yeah. Right? So we don't shame anyone's journey. Yeah. Everyone is coming to the table from like a really unique place. Yep. And I think that also plays into financial confidence.
Like we say, start small, think big, like making those small little changes, even just developing those habits of savings. Being able to get into the rhythm of putting some money back.
Even $5, $10, $15 a paycheck will grow, and that feeling of I'm doing this will grow. And that feeling, that knowing that you're building the habit, is the biggest part for building financial confidence. So it's not about my perspective on your finances or how confident I would be if I were you. It's about you and like having all of the information that you need.
Sometimes you think, how can I get started? Like, how do I build that financial confidence? And we kind of already mentioned it, but starting to get to know where all your finances are. And part of that is that spending and savings tool, like getting that clear view of where you are right now putting together that budget, listing out all of your expenses, listing out all of your incomes, going through and seeing where you're at and saying, okay, here's our step one. And then also going through and revisiting that on like a monthly basis.
If you don't know where you are, if you don't get that clear view of where you are, it's really hard to map a way forward that works.
So that was a great conversation between Ben and Amanda. And already today, you've heard the term financial confidence quite often. And you may be wondering, like, what is that? What's the definition of financial confidence? And really, you can look at it as three specific things happening at once. So, first, you have a really clear view of your finances, right? You know your income, you know your expenses, and you know what your savings goals are. The second part of that is that you're taking positive action toward those goals. So you are taking steps to reduce your debt, you're taking steps to increase your savings, maybe even taking steps to increase your income. That third piece of financial confidence is having access to support and community resources. And when all three of those things are happening, clarity of your finances, taking those positive actions, and having access to support and knowing where to go into your community to get additional support and help, what happens is you feel empowered. You feel empowered to take the next best step towards your financial well-being.
Absolutely. And I have to say, just by being here today, you're building your financial confidence. You're taking action towards increasing your savings, and engaging with us means you're accessing community support and resources. So I'm so happy you're here. The first part of that definition is having clarity of your finances. And that is the best place to start when it comes to jumpstarting your savings journey. Getting a clear view of your finances means you know your income, you know your expenses and your savings goals, and you understand what steps you need to take to get from where you are to where you want to go.
So at America Saves, we encourage you to use a tool called the Spending and Savings Plan tool, also known as a budget, like Ben and Amanda mentioned in the video. We'll link to the tool in the comments that's accompanied by a really great blog post that walks you through each of those steps. And after you've gotten clear on your income, your expenses, and your savings goals, an important part of that spending and savings plan is assessing your financial landscape.
Joining us to chat about how to assess your finances and figure out what moves to make, we have Kristen Pugh, a certified financial planner. Kristen volunteers with the Foundation of Financial Planning and offers pro bono financial planning for everyday Americans like you and me, including some of the most financially vulnerable members of our society, including wounded veterans, domestic violence survivors, struggling single parents, people with cancer, and many, many more. Kristen, okay, when someone is to the point where they have a clear understanding of their income, all of their expenses, and have identified their savings goals, and now it's time to start thinking about reconciling and adjustments that they need to make, what are some things that they should consider?
That's a really good question because I think what we run into, or what I see more often than not, is that part right before we start moving money around to figure out how we can get to our goals. It's that expense review. So going back and we look at, what did I spend my money on this last year? And I love, let me just take a moment to say, I love that you guys call it a spending plan. I feel like the B word actually has a negative connotation. So what you're trying to encourage is this behavior of it's a spending plan. This is money that I've earned or I have brought in, and so I need to be thoughtful about how I'm spending and saving it going forward. And so what you find is that people will you'll review your expenses, and you'll start to get discouraged, and you'll start that budgeting process before you've even reviewed all of your expenses. So I wanted to pause that there and just say, if you've gotten through that part, if you've looked at all of your expenses and if you've stayed true to yourself and just said, hey, these were things that I spent, that is what it was. Okay, I can make the changes moving forward to get to my goals. Well done, because that to me is half the battle. So going forward, just be very aware that your emotions, this can be a very emotional process. And so it can weigh into how you save, not just the process getting into where you get to your goals in the first place. So very emotional.
Yeah, it really is. I mean, we've had, Amanda and I have been on events before where people are asking us, oh, I spent this amount on dining out. Is that good or bad? And we always tell them, like, we don't get to decide that for you. You get to decide.
No,
So that's a really great
no.
point about it being emotional. And it aligns with what we say here, which is that an informed saver is an empowered saver, and an empowered saver can make the best decisions for themselves and their family based on their unique situation.
Exactly.
So, this is all about getting information first, right? So that we can then take action.
Yeah.
Kristen, what would you say to people who currently know that they're not making what they need to make or feeling anxious about sitting down to do their spending and savings plan?
Yeah. That's a great question. Especially because I think a lot of people come from a space, or they can come from a space of maybe their credit card balance is creeping up. That's one way we can tell that, we're not making enough to cover our expenses. So what's the only real lever to pull besides bringing in more money? Well, we have to cut our expenses down. I always say the great thing about this whole process is that it's finite. Like these dollars, what's on your pay stub, what's on your income statement, that's finite. You know what that is. You know how it gets calculated, and you know what's going out. If you've done all of the research, you've pulled in all of your information, your data, you know what you're spending. Knowledge is power, and that's finite, but it just takes that first step. And you've mentioned it a couple of times here today already. You should already feel so empowered that you're here today watching this, because that, like I said, is almost half the battle. You just got to then keep moving forward and just remember that it is they're finite numbers, and now it's just your job to just start tweaking and get to the goals that you set forth.
That's so true. And the other thing that we talk about here is that there are ways to get creative. So don't let that number that's finite is finite, but you can add to it if you need to, if you have the ability to. We know that there are people who may have disabilities, or that just are at
Mhm.
capacity with time. So getting a little creative around your income is possible. And we also have an older town hall called Creative Ways to Save, where we talk about some ways that you can get creative. But truly, no matter where you are financially, getting that clear view of your finances and creating a plan for either increasing your income or reducing your expenses and saving for what's most important to you really sets the stage to being a more financially confident you.
Definitely. And we have some very exciting news. If you are ready to establish your own spending and savings plan, we'll be hosting a spending and savings plan workshop where our team will walk you through the steps. We'll put the link in the chat so that you can register and start to prepare. So, Kristen, what are some documents that people should gather as they prepare to create their own spending and savings plan, or just additional things to think about ahead of jumping into this process?
Yeah, good question. I think the thing to think about is the more data, the better. So, I could say 6 months of, your income, expenses, pulling in, depending on how you spend. That's the data, that's the information that you're going to need in order to understand where your money's going in the first place, right? So, of course, checking account statements. If you have an online payroll system, of course, you can pull your pay stubs from there too. 6 months, I'd say do 2022. If we're in the beginning of 2023, we're in a great time frame that you can look back on a whole year of income and expenses, and then just start there. Gather all of the information of what you've spent, and what you've brought in. And with those expenses, that can include credit card statements. It can include like Venmo or Cash App, as well as your income too. So again, you got to think, what were the different systems I used to document my income? What were the different systems that we used to spend the income as well too? Because otherwise, it's going to be difficult to see where things went. Don't forget to discount if you're already saving too. Remember what you've saved as well, so then you can adjust those goals as needed too.
Yeah, I really love the idea of looking back on the past 12 months. If your
Mhm.
income is a little bit inconsistent, it helps you get like a minimum or a benchmark of income. And then I don't know about you, but I always have some subscriptions that sneak up on me,
Yeah.
that may not be every month, but they may be like annually or quarterly. And so, looking
Mm-hmm.
back past that, looking at that past year allows you to see like, oh, I do have that quarterly or annual subscription that I need to account for. All great things to know,
Exactly.
Kristen. Thank you so much. And Amanda mentioned that spending and savings plan workshop that we'll be hosting. If you decide to sign up or even watch a replay of it, we are going to send you a list of things that you need to do in order to prepare for that workshop. So as you already know, you can always count on us to give you all the information that you need. And
Mhm.
Kristen, thanks so much for being with us today.
Thank you
And I
for
think we're
having
going to
me.
see
This is
you,
great.
of course. And I think we're going to
Yeah.
see you later in another segment.
So, now that we're clear on our goals and objectives, let's hop into some real ways to save, some practical and tangible steps and strategies that will directly affect your bottom line.
Yeah, so of course, we want to start with saving around the home and general expenses. You've done some of that already with your spending and savings plan, but let's take some time to audit your household. What are those purchasing habits? What are you throwing out or buying too much of when purchase groceries, utilities that seem extremely high or higher than you want them to be, and then doing things like thrifting, where you're not only saving on cash but contributing to less waste and therefore protecting the environment with less manufacturing. You can also look for rewards that have cash back. Make sure you're aware of the privacy policies there, reviewing your subscriptions, those kind of things, right, Amanda?
Yep. Let's take a narrow review on saving around the home by looking at food costs. We have Thomas, who is the Director of Food Policy at CFA, to share some quick tips and strategies on saving with food.
Hey, savers! Food has gotten really expensive in the past few years. We've seen the highest inflation of any time since 1981, and more consumers are looking for ways to rein in their food costs. So, I'm going to give you some tips for eating well without eating up your nest egg. Before I get into how to save on food, I want to point out that if you feel like you just can't get the food you need on your budget, there's help out there. You may qualify for payments under the Supplemental Nutrition Assistance Program, or SNAP, if your income is low. To give you a sense of the cutoff, a three-person family with income of around $2,500 a month or $30,000 a year is eligible, depending on their assets. And the threshold is higher for bigger families and lower for smaller families. For military, combat pay, hostile fire pay, imminent danger pay, those do not count as income under SNAP. In many places, if you're eligible for SNAP, you're also eligible for Emergency Food Assistance Program, or a TFAP, which is a federal program that provides recipients with free food. And regardless of your income, anyone can get help at a local food pantry. Millions of Americans did just that during the COVID-19 pandemic, and that's what those organizations are there for. So, moving on to our first savings tip: cook it yourself. Eating at home is vastly cheaper, and unless your kitchen features a deep fat fryer, it's generally better for you. Preparing your own food can save time too. Figure out a few simple dishes. You'll find that cooking those simple dishes takes less time than going out for takeout or for waiting for delivery. Tip number 2, make a list and follow it. Food manufacturers in the US spend over $50 billion a year in placement and promotional fees in the grocery store, all with the intention of swaying your purchasing decisions. Willpower, they know, is like a muscle that gets tired the more you use it. And when you finally get to that checkout line, what do? You buy the candy bar. So give your willpower a rest, make a list, and just stick to what's on the list. Tip number 3, try meal planning. Meal planning can take a lot of different forms, but in its essence, it means planning out the meals you're going to eat, typically for a week, and using the plan to make your grocery list. Meal planning helps to identify some go-to meals that are affordable, healthy, easy to prepare, and tasty. Tip number 4, prepare it yourself. Just like having someone cook and serve your food in a restaurant costs more money, it also costs more for someone to marinate your chicken, chop your vegetables, mix your salad dressing. arrange a fruit platter, you name it. In some cases, maybe the time saved is worth the money, but keep in mind, the more you prepare yourself, the more you're going to save. Tip number 5, check out frozen, dried, and canned goods. If you're like me, when you think healthy, you think of the fresh produce section of the grocery store. But the whole foods don't have to be fresh to be healthy. Frozen, dried, and canned foods can be more convenient and sometimes a lot cheaper. Tip number 6, consider generic or store brands. These foods are often produced in the same manufacturing facilities with the same ingredients as the more heavily marketed national brands. But the lower marketing costs translate to big savings for consumers and average 25% according to Consumer Reports. Final tip, drive there yourself. No surprise here, drivers need to get paid. If you do opt for delivery, make sure you understand the fees. Services like Instacart, they may charge both a delivery fee and a markup of the prices you would see at the store yourself. So sometimes that translates to a 20, 30, 35% higher bill. Okay, that's it for my tips. Thanks for tuning in. Have a great week.
Really great tips shared there, Thomas. Now, transportation is also an essential expense that by making some small adjustments, you can see some really great direct savings. Some quick tips off the top of my head are consolidating your errands, negotiating remote or hybrid work if that's a possibility for you, maybe carpooling or using public transportation if you live in a city, and you can even ask and see if your employer offers some type of reimbursement incentive or benefit for using public transit.
One way that we often forget, though, is shopping your auto insurance. Joining us to talk about auto and home insurance is Doug, who is the Director of Insurance at CFA.
These days, you can hardly watch TV without encountering pretty funny ads that insurance companies spend billions on to make us laugh and buy their coverage. But since we will spend hundreds or thousands of dollars a year on insurance, which of course we hope never to have to use, getting the coverage that is right for you is serious business. One very specific way to save money on your insurance, auto, home, or renter's insurance, is to shop your policies at least every other year or so. Just because your company promises you a loyalty discount for staying with them, it doesn't mean that your insurance company has the best price for you. In order to be a good shopper, you need to know what you are up against in the market. Research by Consumer Federation of America has revealed that insurance companies consider a lot of surprising factors when deciding how much to charge you. Some companies charge drivers with perfectly clean driving records more if you don't have a college degree, or if you're in a blue collar or a service job, or if you're unmarried. Almost all companies charge you more if your credit history isn't excellent. In fact, several insurers even charge more to a safe driver with low credit than they do to somebody with a drunk driving conviction, as long as they have an excellent credit history. This, of course, is wildly unfair and unnecessary. And at Consumer Federation of America, we are working around the country to pass laws that will stop this. As you might suspect, insurance companies also place heavy emphasis on the zip code in which you live. Unfortunately, this use of zip code, as well as these other factors, reinforce long-standing social inequities. Like I said, we're working to get these markets reformed. But for now, these pricing practices mean that if you don't fit into the company's vision of an ideal customer, it's even more important that you shop around for your insurance. So let's take a deeper look at auto insurance, which almost every state in the country requires drivers to purchase. Now, for everything I'm going to talk about, these things vary from state to state. So be sure to check on the websites of your state insurance department or Department of Motor Vehicles to get the specific rules that apply to you. Generally, most states require you to buy a minimum amount of liability coverage that will pay for other people's injuries and any property damage that you cause in an accident. Now, there's also comprehensive and collision coverage that's required if your vehicle has a loan or is leased. And in some states, you might need to also buy special coverage for your own injuries that kicks in no matter who caused the crash. Now, if you own your car outright, one way to save money on your monthly premium is choosing to eliminate that comprehensive and collision coverage and only carry liability. But before you cut coverage, think about how much it would cost to replace your car if it were totaled in an accident or by a storm, and if you can withstand that kind of financial shock. You could also increase your deductibles in order to lower your monthly premium. But as your deductible goes up, you are getting less protection from the insurance company. So that's also something you need to consider. along with always having that deductible amount in your savings in case your car gets damaged or stolen. If you live in California, New Jersey, or Hawaii, and you earn a low income, you might qualify for programs that offer very inexpensive coverage. The website mylowcostauto.com, which is overseen by the state of California, has great information about a special program in California for low-income residents with good driving records. Okay, I'm going to shift gears and talk a little bit about home insurance. If you have a mortgage, your lender will require you to buy homeowners insurance. And with homeowners, there is a little less choice than with auto in terms of the amount of coverage that you get. The insurance companies estimate the cost to rebuild your home and charge you a premium based on that. You can increase your deductible to lower your premium, but again, remember that means you'll have to come up with more cash up front in order to repair your home before your insurance company pays a dime. If you're a renter, your building is usually covered by the landlord, but you can buy insurance coverage that covers your personal property, and that's actually pretty inexpensive. With both homeowners and renters insurance, it's really useful to have a good additional living expenses coverage. This pays for your hotel room or a rental if you can live in your home for a time after a claim catastrophe. So you should check to make sure your policy provides good coverage for this. Now, one of the most important things to know about home and renters insurance is that, especially as climate change is making weather-related catastrophes much worse, depending on where you live, you might need some additional coverages to protect your home. Your policy probably does not cover flood damage, hurricane damage, or earthquake damage. And I cannot stress this enough. If you live where any of these types of catastrophes might happen, talk to your insurance company or agent and find out if you have these coverages or how you can get them. Far more often than I want to recount, we hear from people who bought home insurance only to realize after their home was destroyed that flood or earthquake damage are not covered on their policy, and they're left with no insurance money to rebuild. Now, speaking of agents or brokers, they can be very helpful in finding the best insurance for you, but be careful to avoid brokers who want to charge you a special broker's fee for the service. They already get paid a commission. And for the most part, unless you have a very unusual situation, like a history of drunk driving or a lot of prior home insurance claims, the insurance you need is not so complicated that you should be paying extra fees to get a policy. Ask about it. And if the person offering to sell you insurance intends to add on a broker fee, then it's probably best to keep on shopping.
I learned so much during that segment. Thank you so much, Doug. Now, lastly, there's always these unplanned expenses and purchases that just kind of pop up, right? Of course, when those do happen, you want to try to avoid using credit. That's a huge thing to help you save, of course. But most people don't think about using buy now, pay later options as credit, but they are. So, here to tell us a bit about buy now, pay later is Rachel. She's the financial services manager at CFA.
Hi, everyone. I'm so excited to be here today to discuss Buy Now, Pay Later or Pay in 4 products. These products are often offered at checkout of online websites like Amazon or really any other e-commerce website at this point. Buy Now, Pay Later allows a consumer to pay a quarter of the purchase upfront and the rest of the debt in 3 often interest-free installments over a set period, usually 6 weeks. So to give you an example, if I make a $100 purchase, I would pay $25 upfront at the time of the purchase, and then $25 every 2 weeks for a period of 6 weeks. Some of these products are offered available through a smartphone application or a website or even directly through an e-commerce seller. Examples of kind of the third-party smartphone application or website are Affirm, Klarna, Sezzle, Zip, and QuadPay. These products can offer an affordable way for consumers to pay off a large purchase over a set period of time. But they also have their risks, just like any other debt or credit product. For example, they often lack underwriting for a consumer's ability to repay, which can lead to unmanageable amounts of debt. They can also have a number of different fees associated with them. They can have negative credit reporting consequences, and there can be difficulty with disputes and refunds. So today we're going to talk about kind of why people use them and then what you should be aware of when you're using them. As I mentioned, they can offer a far more affordable way to pay off a large purchase than credit cards. Often, if you're carrying a minimum balance, they have interest associated with them. If you pay off that minimum payment, though, that interest goes away. But these products, the Pay in 4 products, are, if used correctly, interest-free. They can also offer consumers an opportunity to pay off the debt in a small number of installments rather than one lump sum like a debit card purchase. They are also generally repaid more quickly than credit card debt, as credit card debt can kind of cascade as you get more and more credit card debt and the interest adds on and possible late fees add on. And they can be more convenient or easy, as many are offered at e-commerce checkout. So if you're making an Amazon purchase or a Walmart purchase or an Apple purchase, they're offered right there at checkout, and they just can be more convenient or easy for the consumer. These products can fill a need for consumers, and they can really offer a more affordable way for consumers to pay off a large purchase. But they also have risks, and people should be aware of those risks when using them. First of all, just like any other type of credit or debt, the consumer, you all, should understand all the terms and conditions and what the credit is going to cost you right now and also over time. For buy now, pay later, there's no uniform disclosure of fees. So when you think about taking out a credit card, you get that fancy little box that tells you what the APR, what the interest rate is. For buy now, pay later, that doesn't exist. So you want to read the frequently asked questions, the user agreements, everything really carefully to understand if there are any fees associated with the product. These can be late fees, so if you're late on a payment, but they can also be fees like rescheduling fees if you have to reschedule a payment, or account reactivation fees. So if you don't use your account for a while and you want to reactivate that account. So you want to really understand all those fees associated with the product before you take out the credit. The other thing is you want to plan for, I think America Saves talks about this a lot, but plan for both now, where your financial system is now, and for a rainy day, right? So if you have a change of income or something happens to you financially, you want to make sure that you're thinking about this debt both in terms of good times and harder times, since there are the same consequences for some of these as any other form of debt. Think like a credit card or a line of credit or a mortgage. So if you're unable to pay on time, there's the risk of late fees, there's the risk of negative credit reporting, and the possibility of debt collection, similar to those other forms of credit. The other thing that consumers should keep in mind is that these aren't necessarily a credit building product. So we are now starting to see these products be reported to your credit reports, but they don't really fit into your credit reports the same way as a credit card or a line of credit or a mortgage or a car loan. And right now we're seeing the way that they're being incorporated is actually sometimes causing consumers' credit scores to go down just because of the way that it fits within the existing system. And the credit reporting bureaus are working on this, and the buy now, pay later providers are working on this. But for right now, consumers shouldn't be thinking of these as a way to build credit. It is an affordable way to pay off a debt, but it's not going to necessarily have that same credit building effect that other credit products like a car loan, like a mortgage, like a credit card might have. And the last thing to keep in mind is that returns can be really tricky because there's a third party involved and you're not dealing with the e-commerce or e-seller directly. And the other thing is you don't necessarily have the same protections you have when you're using a credit card or a debit card. So you want to be really sure of that purchase, and maybe you don't want to use this type of credit on things that are more likely to be returned or more likely to have to need to get that money back. So things like travel or services or products that you're trying out for if you're purchasing products to try out, because that return process can be tricky. And the last thing is, if you run into problems while using this buy now, pay later product, the Consumer Financial Protection Bureau is a great resource. They have a lot of different helpful blog posts about these products, and they have a complaint database. So should you run into problems with returns or credit reporting or debt collection or fees, you can submit a complaint to the Consumer Financial Protection Bureau, and they will reach out directly to the BNPL provider on your behalf.
So now that we have some very real and practical ways to save, let's jump into some strategies that are a bit more broad that many savers come to us to seek answers for. And that's how to actually save and what to do with your savings. So back to chat with us is Kristen Pugh. Welcome back, Kristen.
Hi.
Right.
Thank
So,
you.
being a good steward of your savings is something that quite a lot of people are thinking about, especially as they're making the decision to either jumpstart or renew a commitment to sticking to their spending and savings plan or pay down their debt. And as they're implementing a lot of the tips and strategies we shared in our last segment. So, I know
Mhm.
personally there have been times where I've been in a feast or famine cycle where money was
Mm.
really tight and then I had a little bit of extra, and the moment I get the little extra, what do I want to do? I want to treat myself. I want to go all out. I want to do all the things
Yeah,
that I
treat
couldn't
yourself.
do when
Mhm.
I was in that like state of having tight money. And
Mhm.
I kind of end up overextending my funds. That's a nice way to put it, right? That's a really good way.
Yeah,
I just
very
overextended my
PC. I like
funds.
it. Mhm.
So, this idea of being a good steward of your money is about being cognizant and conscious of your choices and keeping your eye on the prize, so to speak. The team and I at America Saves have been exploring what we're calling either values led or purpose led savings, really thinking about your own personal values when you
Yeah.
start to consider what you are saving for. And a lot of times, connecting our savings goals to those very personal values that we have allow us to be more convicted and more excited about what we're saving for. And then you can
Mhm.
decide, like, because you know that what you're saving for is tied to your own personal values, then
Mhm.
the thing that you're thinking about buying on impulse, like those Beyonce tickets that I've been considering myself, or whatever that new shiny thing is, they're not as important, or it's easier to say, you want to know what? My eye is on the prize. I'm really focused on saving for this one thing. So that's not to say
Exactly.
not to treat yourself. Um, we all need to have some joy in our life, so that's really important, but you are
Mhm.
committed to the spending and savings plan that you establish for yourself. And that's the way to make the most of what you're saving for. So, Kristen, as
Yeah.
people are sticking to their plan and as they start to think about maximizing their savings, what are some really great savings vehicles that are available that they should be considering so that they can maximize those
Yeah.
funds?
Oh, great question. Because I love that you're talking about the big picture goals, right? And aligning those with the values. But a lot of times the question is, well, do I put this in my checking account, my savings account? I've heard of these other types of accounts or what we call vehicles. What should I be saving to those? And so I always like to say to align the timeline of the goal with the type of vehicle or account. So, for instance, your checking account, right? That's your working account. A lot of times, your checking account is the in and out. You get your paycheck, you get your income source, you pay your bills from it. So, I typically don't recommend a lot of quote savings in that type of account. So, what other account could we assign savings goals to? Well, there's savings accounts. There's also these what you'd call high yield savings accounts. So right now, interest rates, you've probably heard on TV, have been pretty high. So that means savings interest rates are pretty high too. So the beauty of a savings account, like a high yield interest savings account, is you can put the money in. While it's in there, you could be getting somewhere in the neighborhood of 3-4% right now. And that amount of money that's in there, you can actually withdraw it with no penalty. It's quote liquid. You can just take it out. You're not tied up. So in my mind, a savings, high yield interest savings could be something for an emergency fund goal. Maybe you're trying to bolster that up. Maybe you had an emergency and you're trying to build that back up. That's one type of vehicle. Another vehicle that you hear a lot about is a CD or certificate of deposit. Now, again, the timeline factor comes in, right? Because a CD does have a time period where you can't touch it. Otherwise, you're not going to get that interest rate. So a CD could be like 6 months, 12 months. So if you want to buy a new car in 6 months, let's say, or you have, another goal like a tuition payment or something like that, maybe utilize a CD for a short term to intermediate term goal you might have. IRAs, another type of account, retirement account, right? So a longer term goal. So that's more of a investment where, there might be some level of risk involved in opening that account, and you might get some kind of tax benefit by putting money into it as well too. Another account in the alphabet soup of accounts is what we call an ABLE account. So ABLE, which is Achieving Better Life Experience. This has been a relatively new account to come on the scene to help people still qualify for public benefits, but then save for those with disabilities. So we know that people that have Social Security disability payments, you can't have your income rise above a certain level. So this allows people to save above that level without triggering losing their benefits. And then lastly, a 529. So that's more of, think of 529 and equate that with an education savings goal. So if you have an education plan that you want to start putting money away for, utilizing a 529 is helpful because you get a tax benefit for accumulating and growing it over time. You take the money out, you pay no taxes on it if it's used for qualified education expenses. And depending on what state you reside in, you might even get a state tax benefit. So like I said, always recommend to match the timeline with the type of goal. And that's a good way to start your savings plan.
Oh my gosh, that is such a great way of looking at that, the timeline. When you couple that with this idea of like personal values led savings, then it becomes really easy for you to identify what savings goals are most important to you and which type of savings account or savings vehicle to choose. So thanks for that, Kristen.
Yeah, you're welcome.
Thanks. So essentially, when you are starting to save and wanting to maximize those savings, we're going to have to do a little bit of homework, right? And so we've talked about kind of ways to save and where to put that money. Let's talk about the how, like how you actually do it. We've mentioned that today is the kickoff of America Saves Week. And our theme is, today's theme is saving automatically. We know that saving automatically is the easiest and most effective way to save. So before we jump into like different types of strategies and ways to save, let's hear from Amanda Woods and her partner Hans, as Hans shares how he was inspired by his wife to save automatically.
Hi, I'm Amanda Woods, Strategic Partnership Coordinator here at America Saves, and today we are here with
Hans Buckner.
my fiance.
Your fiance.
Love of my life. Before we jump into it, I kind of just want you to talk about how you're saving automatically now, and then we'll jump into the story behind it and all that.
So I'm automatically saving by having a part of my paycheck each pay period just automatically deposited into my savings account instead of my checking account. So I deposit the majority into my checking account, but I set aside $100 from every paycheck to go into my savings account. Just really nice to not really be thinking about having to put money aside because it was happening automatically.
Yeah.
And then when I would look at my bank statement and see that number just getting bigger because I was putting money aside intentionally, even though it was in the background, it was very encouraging.
How? Like, what made you want to start to save automatically?
So a couple years ago, when the pandemic started, everything kind of changed for a lot of people, and including us. We both started working from home, and since we lived together, we were sharing the same home office. And I heard a lot of phone calls or Zoom calls that you were on where you were talking about split to save and automatic saving, and I thought, that sounds like a really good idea. Maybe I should take this advice and start saving myself.
You're so excited to tell me that you had been saving automatically. And I love that. And I love that it happened when it did. Being in the pandemic, and we had a lot of things sort of changing around us. And then we had some transitions as well. You left your job, we relocated. And so what was the feeling of knowing that you had been saving automatically? Like, how did that maybe impact those transitions for us?
Saving automatically certainly made me more financially confident and more, I guess, willing to accept the unknown.
Now, we say all the time that saving automatically is the easiest and most effective way to save, but it isn't the only way to save. Finding the way that works best for you and how your brain works is going to make saving much easier for you, but also more fun. So just like with different learning styles, there are different saving styles, and there are people who think differently. So what works for one person may not necessarily work for you. Some people save really well using a cash system or an envelope system. And for some of us, having cash on hand means that you're going to spend a little bit more freely. I am that type of person. But some people, having that debit card and swiping doesn't work for them. The key is finding what approach to saving is the best way for you. So I'd like to introduce you to Michelle Hammonds, who is the director of the Office of Financial Empowerment and Education at the District of Columbia's Department of Insurance, Securities, and Banking. It's a mouthful, but very, very deserved. Michelle, so great to see you.
Great to see you as well. Thanks so much for inviting me here to talk to you today.
Of course. So we had a great time recently at a conference. And as we were sitting and talking, you shared one saving strategy that has been helpful to a lot of people that you know. And I was like, I got to get you on the town hall so you could talk about this. So can you tell us a little bit about this saving strategy that you shared with me?
Sure. And I want to just piggyback on what you were saying, where you said making savings automatic is so important. And so we even came up with a way to help people think about how they can make their savings automatic with our 1378 challenge. This is a challenge where an individual could save for 1 year the dollar amount for the week. So you would do it where if it's 52 weeks in a year, which we all know, and we would save that dollar amount per week. And with that, we would encourage you to do it in a reverse order. So you would start with $52. The next week would be $51. The subsequent week would be $50, and so on and so forth until you get down to $1. What does this do? It helps you to save $1,378. Now, this is a great way to get started on that savings goal. If you can get started with your first $1,000 or so, this is a great tool to help you. And what makes it even easier is if you do it automatically with your bank or financial institution, where it can come directly from your checking account into your savings account. If you're not that advanced or you're not doing that method, that doesn't work for you, you can also do it in an envelope method as well. But the most important thing is to get started and to be consistent. So this was a great tool that I did share with Kia when we were meeting, and something that we advocate here at our office.
Oh, I love that, to be able to know at the end of that 52 weeks, you have 1378 already saved. I mean, that is a really achievable milestone. And I also like that you start backwards. So it just gets easier as you go along to, make that transfer each week. I really, really love it. So thank you for sharing that tip. And it really aligns with one of our favorite sayings here, which is saving is a habit, not a destination. So this really focuses on building the habit of saving and getting into, that habit of saving every single week. The other thing that I really like about this that you said is that you can combine these tactics. So for instance, if you already have automatic savings set up through split deposit, but you want to kind of increase your savings, you can continue that automatic savings that you have set up, but then add that little bit of extra. So you're, saving that extra 1378 on top of what you're already saving. So really, really great strategy. Now, Michelle and Kristen, you both work in your communities. Kristen, you volunteer as a pro bono financial counselor for people who often earn a low to moderate income. And Michelle, you work in the city of DC and work with many vulnerable populations. So I'm sure that you both see and hear from people who feel like they are in a space where they can't afford to save because at this moment they're not making enough to meet those really essential needs. And we encounter that quite often. Now, this time of the year is tax time, and that means that some of us will be getting large refund checks. Not me, I wish. Well, I won't get into what that means and if you should or should not have the goal of having a large refund. That the reality is this is what's happening, right? And people are receiving those refund checks. So for many people, this is a great time and may be the only time that they're able to save. So if you've been on the receiving end of a tax refund, an easy saving strategy that we like to call here the 30-40-30 rule is this. Essentially, you take your tax refund or any other windfall that you receive, like a bonus check or some other type of unexpected income. And what you do is you focus on saving for your past, your present, and your future with that unexpected windfall. The past is your debt. So 30% of whatever you receive is going to go towards paying down your debt and expenses. Next is your present, and 40% goes there. And that goes toward your current expenses and even a little bit of something that you want, because remember, still having joy and being able to treat yourself is important. And then that last piece is saving for your future. And that's the other 30% that you're going to put towards like your emergency fund or other savings goals that you have. It's a super easy way to remember saving for your past, present, and future. And if you've been wondering, a lot of times the questions that we get, and I'm sure the two of you have encountered this question too, is like, there's so many different things that I need to be saving for. How do I save for so many competing priorities? There's your answer. In one fell swoop, you are saving for your past, present, and future, and you already have a really easy allocation that you can make sure that you're hitting all of those competing priorities at once. So Kristen, really quickly, I wanted to ask you to share some insight around the things to avoid when you're saving, because that's just as important as like choosing a savings strategy.
Great question. And when you were talking about the tax refund, one of the things that I see a lot, or that I hear a lot, is and I'll say is something, especially if you're in savings mode and you're committed, when you hear or know what your tax refund is going to be, a lot of times we start mentally spending it. We start spending it but not saving it. So I'd say, something I try to avoid myself when I know of some extra cash that's coming my way is I try not to mentally spend it on the treat yourself section, but more of the saving section. What am I going to save this for? Like, start getting yourself like psychologically amped up. Avoid mentally spending it, but maybe start mentally saving it. The other thing I'll say too is to avoid when you're trying to save is comparing yourself to other people. Everybody is different. Everybody has their different ways of understanding money, the way they've grown up with money. And so when you compare yourself and, if somebody is more, if they have better outcomes with using a cash method, right? Or if they're better at, doing an automatic savings program where they don't see the cash at all, you're going to be different. So you've got to meet yourself. You got to meet yourself in the middle where the savings strategy is going to align with, like you said at the beginning, your own personal values and how you work with money. So in general, I would say also too, more than likely, if we have goals, if we have savings goals that we're trying to achieve, hoarding the cash or putting it under our mattresses is probably not the best way to attack that goal. I would say start with the way you mean to go. You have the goal, align those vehicles like we've talked about with the savings goals and amounts.
Really great tips. Michelle, wanted to get any last thoughts from you around what to avoid when you are focused on saving.
Thanks for that. I would add that whenever you're thinking about savings, making sure that you just avoid saving without a goal. naming your goal, naming even that savings account with that goal in mind will be helpful to you in trying to achieve that goal, because now you're giving yourself an accountability and you're saying, this is what I want to make sure I accomplish. And then also, I would encourage you to make yourself a priority. As we've talked about, making savings automatic, that's a great tool that you can use, but also making savings a priority. Whether you start with $5 a week or a month, starting small, making a priority, those are ways that can help you build the habit of savings. And once you start to get that habit in check, and you start doing it, then it will become easier. And so I like what one of our colleagues said, don't compare yourself to everyone else. You have to start with where you are and what works best for your particular situation. But don't feel as though you have to go so extreme and I need to save $500 now. Whereas if you wanted to save $500 over a period of time, or our 1378 challenge, where you know what you're going to accomplish within a year's time, then make it reasonable for you and use those guidelines that were there to help you.
Those are some really great tips and things to remember. As we're talking about things to remember, one thing is to be sure to check in with your spending and savings plan or your budget consistently, making sure you're tracking what you're spending, what you're savings, making adjustments as you need to in real time. And as Michelle mentioned, remember your goals. Put them where you can see them. So a sticky note on the fridge or the mirror can go a long way to keep those savings goals in the forefront of your mind. So Michelle and Kristen, thank you so much for joining us and for sharing such great insights for our savers today.
Thank you.
Absolutely. Thank you.
As always, we encourage you to share with us what tips, strategies, and tools you plan to implement from today's events.
Also, remember the opportunity to win 5 $1,000 cash prize in our I'm Saving For sweepstakes.
Thanks for joining us today for the Think Like a Saver, Real Ways to Save virtual town hall. We'd like to give a special thanks to our sponsors whose generous donations helped us bring this event to you. NACHA, AFCPE, JP Morgan Chase. Thank you for allowing America Saves to be your savings accountability partner and trusted resource as you work hard towards your financial goals.